the COVID war, the damage it's done with the office building bust when people worked from home. And they didn't want to go back and commute an hour and a half each way, tired of spending all that money and giving up their lives. And people renting the office say, I don't need them here. Just come in a couple of days a week. I don't have to pay all this rent. There's going to be a banking bust. So whatever Trump does, when this thing goes down, he is going to do everything to artificially prop up the economy with fake money backed by nothing and printed on nothing and very low interest rates, which means gold prices are going to skyrocket.
The number of U.S. borrowers at risk of defaulting again on commercial property loans has reached its highest level in a decade, raising significant concerns among regulators and market observers. At the center of this issue is a controversial banking strategy often referred to as extend and pretend, in which lenders modify or extend loans to delay recognizing losses. While this practice can provide short-term relief to borrowers and keep loans off the non-performing list, a recent paper by researchers at the New York Federal Reserve examined this phenomenon in detail, highlighting how banks have relied on concessions to property borrowers, particularly in the aftermath of the COVID-19 pandemic. The authors noted that these modifications often serve as a means to avoid writing down impaired commercial real estate loans. They warned that this approach risks credit misallocation and a buildup of financial fragility, as resources may be directed toward unviable loans instead of more productive uses. The paper also underscored how this practice contributes to a rise in double defaults, where borrowers who were given extended terms ultimately fail to recover and default again. This trend reflects deeper issues in the commercial real estate market, where high vacancy rates, declining property values, and elevated interest rates continue to weigh heavily. In a recent video on his YouTube channel, popular author and trend forecaster Gerald Celente warns that this could be the beginning of another prolonged banking bust in the United States, which would necessitate the Federal Reserve to drop interest rates drastically and start printing again to prevent a complete collapse. Gerald suggests that this would be great for gold and silver prices, as it would drive investors towards safe haven assets and make the deep rot in the financial industry all the more glaring. As we present clips from Celente's insightful video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. We appreciate the support and hope you enjoy the video.
On to the markets. Oh, the S&P and NASDAQ hit a new high. That Trump bump keeps going up. NASDAQ, yep. The Dow, it was up a little bit. Oil, it went up a little bit, 73.69, because OPEC Plus is going to meet. And the guess is they're going to cut back on production. But it's not going to make a big difference because the global economy, as we detail with one country after another, from France to Germany to China, all over, the economies are going way down. And so it's a supply and demand issue. So they may, they're definitely going to cut back on production, but other countries are going to put more out there. Unless, of course, or not unless, when the Israel and Ukraine wars keep escalating. That's the dangers of oil prices ahead. Gold was up a bit today. It's hanging in the same area, $2,642, up $601 since the start of the new year, when we call this a golden age for gold. And what else? Bitcoin, still hanging at that 96,000 mark. And there's the guess, is Trump going to go through with his pledges that he made to the crypto club when they gave him $200 million, that he's going to keep pushing this forward? We're bullish on Bitcoin. And again, money talks and bullshit walks. The money made Trump talk about Bitcoin, and the more dough they pour in, and if he's invested in it, watch the prices skyrocket. And then again, we have an economic update in this Trends Journal. And, we're saying it's basically, at this point, it's a guessing game of Trump sticking to what he's going to say on tariffs, on taxes. Again, he says one thing and does another. So the facts are there. Yes, some tariffs he stood by when he said he was going to do it. Others he didn't. He backed right off. The facts are there. We only put the facts down. So it's a guessing game. But the big trend that no one is talking about, other than the Trends Journal, is the office building bust and how that's going to affect the banking system. And I say this, nobody else is talking about it. We're the only ones. And now an article came out today on Wall Street on Parade, which is a great site that I suggest going to, which details what we have been saying that no one else is talking about. Go to Castle System, Kastle. Google it up. Yeah, we had the Thanksgiving holiday. The office occupancy rate, 40.6%. On average this year, 50%. Going back to the COVID war, the damage it's done with the office building bust when people worked from home. And they didn't want to go back and commute an hour and a half each way, tired of spending all that money and giving up their lives. And people renting the office, I don't need them here. Just come in a couple of days a week. I don't have to pay all this rent. There's going to be a banking bust. So whatever Trump does, when this thing goes down, he is going to do everything to artificially prop up the economy with fake money backed by nothing and printed on nothing and very low interest rates, which means gold prices are going to skyrocket.
The looming maturity wall in commercial real estate, CRE loans, presents one of the most alarming risks for the financial sector, as outlined by researchers at the New York Federal Reserve. This term describes the growing volume of CRE loans set to mature within a short period, threatening to unleash a cascade of defaults and significant losses. The authors emphasize that this issue is exacerbated by the extend and pretend strategy banks have been employing to defer loss recognition. The data is stark. As of the fourth quarter of 2023, CRE loans maturing within 3 years accounted for 27% of bank mark-to-market capital, up from just 16% in the fourth quarter of 2020. Loans set to mature within 5 years represented an even larger 40% of this capital. These figures reveal how weakly capitalized banks, eager to avoid immediate losses, have contributed to this expanding maturity wall. Alarmingly, this growing wall of maturing debt constitutes 16% of the total CRE debt held by the banking sector, underscoring the scale of the potential financial shock. In his video, Celente argues that the delayed recognition of losses creates a ticking time bomb. When these deferred loans come due, the resulting defaults could trigger massive financial instability. These dynamics not only threaten individual banks, but also pose a broader systemic risk to the financial sector. By deferring the problem rather than addressing it, banks and other holders of CRE debt are leaving themselves, and potentially the entire economy, vulnerable to a sudden and severe financial shock. Let's get back to the video.
So now going back to Wall Street on Parade, this is an article they had. New York Fed report 27% of bank capital is, quote, extended and pretend in commercial real estate loans, which in part states the dire office building crisis as a result of the vacancy rates being covered up. We are the only ones that have forecast that. You go back to your Trends Journal, May 2020, when the war began, the COVID war, we warned this was going to happen. And then they go on today, they put another article out about what they reported. The guy was a financial research advisor for the New York Fed. And they go on to say that the losses the banks are exposed to in commercial real estate, that the sudden large losses can be exacerbated by fire sale dynamics and bankruptcy court congestion. They keep going on and on and on, saying the exposure to illiquid and risky assets makes life insurers vulnerable to an array of adverse shocks, including that of an economic downturn, you ready, or a significant future deterioration of the commercial real estate. It's there for everybody to see. No one is talking about it. So I'm just saying this. You do what, the motto of the Trends Journal. By the way, these are the articles, back articles you could see here of the office building bust. And then this is how we end it in this economic update. Therefore, when building owners default on commercial real estate loans and banks don't have money to cover the losses, it will crash the equity markets and global economy. As a result of this crisis occurring during Donald Trump's presidency, he will do what he can to prop up equity markets and the economy. The results, as I said, will be lower interest rates, more fake money backed by nothing and printed on nothing, trillions of bailout money for the bankster bandits, and spiking gold and Bitcoin prices. That's our forecast. And again, we have the whole economic update, what the GDP did, what's going on with the fascism, giving money to these companies to do what they want, grants they call them, trends on the global economic front, all of the jobs that are being lost that they're not reporting on, all the businesses that are going out of business, the problems going on in France and Germany, throughout the Eurozone. India's economy slowed down. South Korea, you saw it happen. The guy called martial law and then they reversed it. So we had an article in here before this happened, and it's South Korea's central bank cuts interest rates because the economy going down so bad. When all else fails, they take you to war. This little clown bastard prick over there calls a state of emergency. And they're doing it all over. They're robbing more and more people of their freedom in every country that you can find. Like look what they're doing over there in the UK, the FUCK, that guy Starmer and the little clowns. If you say this, you're going to jail. If you say that, you're going to jail. Yeah, no freedom of speech.
Regulators have expressed growing concerns about the long-term implications of the extend and pretend strategy. They argue that by postponing the recognition of losses, lenders could be masking significant vulnerabilities in their balance sheets. This could lead to a systemic underestimation of risks in the financial sector, potentially exacerbating future financial instability. Do you agree that the U.S. banking industry is heading for another 2008-style collapse? How do you think policymakers will react to this crisis, and what will be the impact on gold and silver prices? Please leave your thoughts, comments, and observations in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching, and see you in the next one.